All right, cash transactions. Now, we can make jokes about, getting a discount for cash and avoiding the GST if you pay cash. But the point is that cash fundamentally is money, all right? In our society, we don't transact in gold and things like that anymore. We have paper money. And on that paper money, it's these days made of polymer, but leaving that aside, is written legal tender in Australia and all its territories. Legal tender. What it means is that you can settle a debt with cash, a debt of any size. And cash is special because in economics, cash is a method of payment that doesn't refer to the creditworthiness of the person who offers it. And what I mean by that is, well, when you tap and go on your credit card, there's a computer somewhere which says, yes, Tom Elliot's credit card has sufficient space on it, to pay for these goods or services. So the computer has to go and check my account, my credit or my debit card, and make sure that I'm essentially good for the bill. All right, and only then does it get approved. Now, it all happens very quickly, and you don't really think about it that much, but there is a reference being made to your ability to pay. If you go in and buy a car and, you decide to do it on credit, again, you have to fill out all these forms and prove that you can actually make the monthly repayments. Obviously, the same process times 10 happens when you buy a house or get a mortgage to buy a house. But cash means you can turn up and say, here's my money, hand over the good or the service, and the person will do that. Anyway, for reasons I don't fully understand, there's a bill in federal parliament to try and get rid of cash transactions over $10,000. Now, the bill is called the Currency Restrictions on the Use of Cash Bill 2019. And it would, as I said, put a ceiling of $10,000 as the size of transaction that you can legally transact with cash. Joining me on the line now, Director of Policy at the Australian Taxpayers Alliance, Emily Dye. Good afternoon.
Good afternoon. Thanks for having me on.
What do you think about this? I mean, we're told that reducing cash and reducing large transactions in cash will lower tax evasion and that sort of thing. Where do you stand on this bill?
Well, it's a bad idea, and it doesn't do what it says it's supposed to do. Most tax evasion happens two ways. It's either with really small cash transactions, so someone buying dinner at a restaurant, they pay in cash, and the restaurant doesn't declare that. It's a really small transaction. The other way is big corporations use a team of lawyers to get around the tax law, and they don't do it with briefcases full of money.
Right, so it's not, getting a dodgy reno done on your house for $20,000 and no GST being paid.
Yeah, that could happen, and I'm sure it does, but having a $20,000 transaction, like having that done on your house, the person that's doing that work is actually required to declare that they have received that much money in cash. And they're required to declare all transactions over $10,000.
Is the real reason possibly not tax evasion, but just that the government wants to know what we're up to? Because cash transactions are sort of largely outside the government's purview, whereas electronic transactions can be traced by bodies like the ATO and the Federal Police and that sort of thing. Is that what's really going on here? More governmental supervision and control of our financial lives?
I think that's one of the biggest concerns, both with the government and with big banks. This still forces people onto the banking system more so than they would be otherwise if they didn't want their banks to know what kind of purchases they were making and didn't want the big four to know what they're up to, because in this day and age, data is worth a lot. They would now be forced onto that, and they wouldn't be allowed any sort of privacy.
And of course, I know a lot of housewives of a certain age who squirrel cash away from their husbands and have a sort of a fund they might use to leave one day. Now, presumably that'll be banned by this new law as well.
Yeah, they would be breaking the law, and they could face a 2-year jail sentence for doing that.
Right. So what do we do? I mean, the Australian Senate's having a look at this bill. Do you think it's likely to be passed?
They're voting on the 7th of February, and fingers crossed it's not passed. A lot of good questions were asked at both the hearings, both the one in February, that just happened yesterday, and the one back in December. And so I'm hopeful that they will see sense and won't pass this bill.
All right, thank you for joining us. Emily Dye, Director of Policy at the Australian Taxpayers Alliance. Malcolm joins us. Malcolm, go ahead.
G'day, Tom. It's Senator Malcolm Roberts from Brisbane.
Oh, yes.
And I just want to give you an update on the cash ban. Your guest from the Australian Taxpayers Alliance is largely correct, but I think people need to know the more significant aspects of it that go beyond this. Sure, this bill, if it's passed, will stop us using cash. At the moment, the limit would be $10,000. We expect it'll be lower in the future. And as your representative said from the Taxpayers Alliance, if people break this law, if it's passed, if they break the law, it's 2 years jail. Now, the second point that she mentioned is that it will not stop organised crime, tax evasion and money laundering. They're going on in much more sophisticated ways than using dollar bills.
Right. So given this is the case, or you're arguing this is the case in the Senate, how do you think the Senate vote on this bill is likely to go?
Well, I'll explain that to you by giving you the more serious consequence of this. What it does is it forces people to use the bank. That increases bank revenues. So then you might say, well, so what? Well, negative interest rates are coming around the world. Japan has negative interest rates. Many European countries have negative interest rates. What that means is that we pay the bank money to have our deposits. And what that ultimately does is the only way you can get people to then use the bank is to force them to use it by cutting out cash. Now, the second aim of it is to then enable a bank bail-in. So you've heard of bank bailouts. That's where a bank makes a mistake and it gets into a mess financially, and it takes government money, taxpayer money, to bail it out. A bank bail-in takes the depositor's money and converts them to bank shares. You may not want shares in the bank, but it doesn't matter. Your deposits are converted to some extent to shares. You have your cash taken from you.
But sorry, Mr. Roberts, but I mean, I don't think anybody's proposing that, and we haven't seen that happening in the Western country or the Western world. Thank you very much. Well, whereabouts?
In Iceland, and also there's one other country I've forgotten, but bank bail-ins are happening, and this is what I'm talking about is accepted. The thing you asked me, what about its chances in the Senate? Well, our party came out, One Nation Party came out strongly against this right from the start. I spoke publicly against it and in the Senate. We informed the other parties. The other parties in the crossbenchers look like they'll oppose it. We showed the Labor Party, and they were quite surprised. I talked with Jim Chalmers, who's Shadow Treasurer, and also Stephen Jones, who's the Finance Minister. And they said they would certainly now consider voting against it. What they did was they consigned it to a committee of the Senate. And that committee, those committees normally get tens of submissions. This one got thousands of submissions.
All right, very interesting. Malcolm Roberts is a Queensland Senator for the One Nation Party, Pauline Hanson's party.